Gold falling to a one-week low today. Oil moving higher for a sixth straight trading session. It's the longest increase in prices in 13 months. So what is a better investment, stocks or commodities? Probably a little bit of both. Here to help us answer these questions is John Stephenson. He's a portfolio manager, First Asset Investment Management, based in Toronto, and he joins us in the studio. John, a pleasure to have you here.
Yeah, great to be here.
Let's talk about oil. $101 for a barrel of West Texas Intermediate. That's not news for those that look at Brent crude, but tell us, why is the price increasing?
Well, it's demand, and the demand is out of Asia. I mean, if you look at what's happening around the world, we had a record month in terms of global demand in October, never been higher before. And, you know, you've got Europe a mess, essentially, and you've got China seemingly slowing, but it's still pumping out lots of cars, #1 car market in the world, and that's going to continue. And I think oil continues to be probably your best bet going forward in the commodity world.
But aren't we finding more oil? Isn't there more oil being made available through new drilling techniques, through greater finds?
Well, certainly the Bakken and other regions hold, tremendous promise for new oil, particularly in America. But the oil we are finding is very expensive. Bakken wells can cost up to $10 million. You've got the swing producer, Saudi Arabia, which is the only one that has spare capacity, which is very low, by the way. And their cost on average is $90 to $95 in order to get it out and balance the books, because they've got 6,000 or 7,000 princes running around the country, all who need to be supported financially. And so you've got all of these social issues intertwined with this huge young demographic in the Middle East, which is the swing producer, and you've got the rest of the world struggling to find new oil.
Well, you also have the comments out of Tehran talking about the access to the Straits of Hormuz, which is the transit point.
Well, that's 1/6 of all oil. 15.5 million barrels goes through that transit point. And of course, that would be hugely problematic for oil and oil prices if there was a blockage, or at least a skirmish. And so you've always got this backdrop of this geopolitical aspect in oil, which you really don't have to the same degree in any other commodity.
All right, so how to make money investing in this thesis that oil prices are going to be subject, obviously, to this increased demand? What companies are going to be the beneficiaries?
Well, I think one is the service companies. I think you have to look at Halliburton, you have to look at Schlumberger, probably even Transocean as well, because most of the oil in the world that's controlled by foreign countries and foreign national oil companies. We don't have most of it. 85% of it's controlled by others. So whether Saudi Aramco or not will let Exxon drill or not, hard to say, but we know that Halliburton and Schlumberger probably will get some of those contracts. Same thing with the 2P fields and the Brazilian offshore fields. They'll be contracting the service industries, because that's where the true resident expertise lies within the oil industry.
All right, so Halliburton, Schlumberger in the oil services field. Let's move on, talk about another commodity. I want to get your thoughts on copper, industrial metal.
Well, it's a great metal. I mean, October marked the strongest imports for a couple of years into China of refined copper. We see that being very tight. Mine supply will not keep up in 2012 with demand. Scrap will have to make up the difference. Treatment charges, refining charges have dropped to an all-time low, which is very attractive, meaning that the smelters really want to get a hold of this mine concentrate, copper concentrate. And then physical premiums, which is what you get for actually having the copper in your hand, have skyrocketed, particularly within China as well. So I think it's very tight, and I think it looks attractive. And I would recommend First Quantum as a name.
First Quantum?
First Quantum, and then Freeport-McMoRan.
And Freeport-McMoRan. Those
strong,
are the proxies for copper, you think?
Very, very strong proxy. I think, Freeport be a little more defensive. First Quantum, if you want to be a little more speculative, beta on that name is very high. It's about 1.7.
And that means it fluctuates?
Fluctuates 70% more than the overall market. So, So if you're bullish on copper, and I am, I think you'll see that one do very well. All
right, Freeport-McMoRan as well as First Quantum. Tell me about what's going on with gold. Do you think gold prices are going to move higher?
Well, I think gold prices have to move higher. I think the end result of all of this that's going on is the ECB will have to come to the realization that the only solution for their problems is to print money. And if we see that happening, that will take the final peg that's held gold back. I think you'll see it push easily through 2,000, which would supersede its previous high, and then go 2,500. So I think you could see that by the end of next year. And
what are the stocks that you would want to own if you think the gold's going to move higher?
Well, I think you definitely want to own Goldcorp. Of the senior producers, second biggest producer. Is cheapest cash cost $5.50 an ounce versus $8.75 an ounce, and strong production growth, roughly 30% growth in the next few years. So extremely good pipeline. I think you want to hold that. If you want to play value, Barrick has been beaten up badly, particularly after the economic transaction.
Why has it been beaten up so much?
It's the largest. People are struggling to see growth. It's an 8 million ounce producer. It's on its way to 9, but people are wondering, how do you get there? And they seem to have just stumbled on everything. They've hit the sharp end of the rake every time. They had the hedge book on. That was the first problem. Then they said they wouldn't go into anything other than pure gold. They bought Equinox, which is a copper play, took on some geopolitical risk as well with that transaction. So I think people are struggling to see how they fit in. But still, I think they're so cheap right now, you have to give them a look.
All right, we've got to just recap, right? Barrick, Gold Corp, as well as First Quantum and Freeport-McMoRan, Halliburton, and Schlumberger. All right, we got 6 of them there. Thank you very much. John Stephenson joining us, First Asset Investment Management from Toronto. Thanks for coming in.
My pleasure.